Good morning, welcome to this weekly market update from MRC Markets in London. Today is the 3rd of December 2012. What we'll do today is go through the main forex pairs and gold. So we'll go through euro dollar, cable, dollar Swiss, dollar yen and gold. Just trying to give some sort of weekly outlook into the markets, just see where the flows are at really. Yes, we'll be looking at the weekly charts, daily charts, 4 hour, 1 hour. Mainly just sticking to sort of technical analysis really. We won't be looking too much at fundamentals, just looking at the text, and just see what's going on. So for any new followers, we have 3 moving averages on each of these charts. The red one is a 55 simple moving average, the purple is 100 simple moving average, and the gold is a 200 simple moving average. We're not making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.mrcmarkets.com. Okay, then let's have a look at a euro dollar. This is the weekly chart. We didn't do a video last week, so we'll kind of have a look at the last couple of weeks' weekly candles. We won't dwell on this weekly chart too much. The one thing I'm going to immediately draw up is this weekly trendline resistance. I'm just going to change the colour of that as well, make it a little bit thicker. Right, so that's the weekly trend line. So you've got it from, that's the first point up there, and the second one there, and the third one there. And you can, we've pretty much broken that already this week. I think we had a gap down overnight and we're starting to pop above it, and it looks like it has kind of broken. The last couple of weeks have been very bully really. I mean, especially not last week's candle, the week before, nice bullish candle there, bullish engulfing, and that also closed above the 55-week moving average. It tried to tank down here. You saw the three bearish candles there in a row. We got well below the 55-week moving average, and you can now see we've closed above this 55-week moving average, and we're trying to break this trendline resistance. And to be honest, that's all I'm massively focused on this weekly chart. I mean, the weekly candlestick close will be interesting to see if it closes above, which it looks like it will do. Yes, it's only Monday, but it is looking quite bully indeed. So the main level to look out for really on this weekly chart is just the high really, which is at around sort of 1.3167. So it'll be interesting to see if we get to 132 this week, if it does still pop towards the upside. Should make this line a little bit thicker. But yeah, the last couple of weeks they really have been very bullish indeed. The thing is, in terms of fundamentals out of the eurozone, there's been nothing majorly out, and no news is good news really for the euros. So every time the market's quiet, it does just tend to just trickle towards the upside. There's been no major moves really, no major tanks or anything like that. So it has just been grinding towards the upside, and that's what we're getting here. Remember, we have the Fed did do their QE, and that's the QE is doing every month, so that will weaken the dollar, and that's what we're seeing here on this euro dollar chart. If we flip it to the daily, you can just see, you can see a bit more in detail where that trendline resistance comes in, and we have had daily candlestick closes above that. So in terms of, there's nothing massively interesting on this chart in my opinion. You could flip it to the 4 hour and draw a trendline support up there, and it looks like it kind of wants to come down to there. Especially the last 4 hour candle is looking a bit sort of retracementy in terms of it does want to come down. In my opinion, it would be interesting to see. I wouldn't be surprised if there wasn't that much action today, but I would kind of be, in terms of buying opportunities, I would prefer to see some sort of retracement, in my opinion, because I just think it's better really in terms of, especially this trend line. It looks like it does want to come down and test that, and it would be a better sort of buying level. But now, in terms of the daily, we're well above the 55-day moving average now. So in terms of these moving averages, you can see how well that 100-day moving average held there, and they're always good to bear in mind really, because price does tend to go towards these moving averages, as it is the average sort of price. So the 55 is still well away now. It's well below the 130 handle. It's pretty much at one spot 29 there. So if we do get any retracement, then that'll be a key level that I'll be looking out for. In terms of cable, this is the weekly charts. Always good to keep this trendline support in mind, just for the sort of bigger picture really, and the trendline resistance there. But of course we're still miles away from both of them, so don't look at them for too long. What I would keep an eye out for is this shorter trendline support here. In fact, we'll flick this on to the daily, so you can see a bit clearer, and we'll tidy that up a bit. Yeah, so you got that trendline support there, and you have the shorter term trendline resistance there. So you can see it's in that sort of triangular formation, and it's getting a bit choppy really, especially the last few days. I mean, what 1, 2, 3, 4, 5, 6, 7 daily candlesticks have pretty much just been flatlining really. There's been no major tanks or anything like that, or any sort of interesting flows really. So that's why it's good to look at these longer term charts, just to sort of keep the bigger picture in mind. I mean, in terms of the weekly, we're back to this weekly chart. We're above this 100-week moving average. I remember speaking a few weeks ago and saying keep an eye on this 100-week moving average. It looks like it wants to retrace, and look out for any sort of buying zones. And surprise, surprise, that's what we've got. And we're now bouncing off this 100-week moving average. In terms of daily, the 55 days pretty much just slicing in between it all. If we get any further sell-off, then look out for that 100-day moving average, and then below here we have the 200-day moving average. But in terms of sort of daily and weekly charts, this is how I'd keep it set up. If you want to look at any shorter term time frames, the 4 hours one I'd keep an eye out for. Similar to Euro, we've got a nice trendline support, but this looks to be a bit more technical in my opinion. And then the key resistance is up here, which is at around one spot 60 level. So that is how I would have my chart set up going into the week. In terms of dollar Swiss on the weekly, nothing majorly of interest. You've got a trend on resistance from there, and I suppose you could draw. Well, it's not really trend on support. You can't really stick that up. I mean, this weekly chart, it does look. I mean, if you draw a fib from your lows to highs, so we'll just change the colour there because I relaunched the platform. For some reason, that's the automatic colour setting, which is quite annoying. We'll just leave the 50 and the 61.8 on there. Yes, we're still miles away from these 50 and 61.8. So, in terms of the weekly chart, in terms of any sort of retracement we're going to get, we're still a long way away from the two major support levels that I personally look out for on the on this weekly chart. We are now below this 55-week moving average, so the next key support I'll be looking out for on this weekly chart is the 100-week moving average, which is coming in at around 0.9123. But no, nothing massively of interest on that chart, to be honest. If we flip it to the daily, you can see we had a nice bounce off that 100-day moving average there, and we're now below the 55-day moving average, so it is looking quite bearish. And I would not be surprised if we did get a nice sort of decent tank on this chart. I mean, the low there is at around 0.92, so keep that level on there. If we get down there, if we break below that, then we really could tank towards the downside, and we may get a test of that 100-week moving average. But in terms of the shorter term play, I mean, the 4 hour you could flip. You could stick a trend on resistance there, bring it in a bit, although it isn't that tidy. And if we do get a bounce up on this 4 hour chart, then look out for that 55 bar moving average. But nothing massively interesting on this chart. So we have seen much more technical weeks and more technical plays. It just looks, I mean, for anything to be of interest, it just needs some sort of retracement, because it's just been grinding lower. Especially if you look at this daily chart, I mean, how many sort of bearish candles have we had in a row? For any sort of sellers to be interested on this daily chart, then they'll either just be selling at the trendline resistance, or a more healthy selling opportunity will be at this 55-day moving average. But until we get those retracements, there's no sort of massive massive opportunities in my opinion. If you're sort of day trading, if you're a long-term trader, then you may already be long euro and short euro dollar and just sort of riding it really and just trading your stops. Okay, let's flip to the dollar yen chart. On this weekly, we've sort of since we've broken above this 100-week moving average, we've had we really have started to fly up towards the upside. Some decent flows there into the dollar, and the next sort of target for any sort of long-term players who are long this pair will be the 200-week moving average, which comes in at 85 spot 20. But of course, we're still about 300 pips away from that. So yeah, in terms of any sort of dip buying on this weekly chart, the first sort of weekly level that people will be looking out for will be the 79 spot 63 level, which is the 100-week moving average. If we flip it to the daily chart, I think we've had a nice nice fib move. I remember from that low there, a lot of people were looking out for, because that was the sort of start of the trend line. I remember that now. You can see a nice sort of clear trend line there, 3 clear points, and then if you draw a fib from the lows to the highs, a lovely sort of confluence support level there. You can see that bang on with the trend line support and the 50% Fibonacci retracement. Nice sort of reversal candle with a long lower wick, and surprise, surprise, we've ripped towards the upside. You can also see how well that 200-day moving average acted as support there. So we struggled initially to get above it for a couple of days, and as soon as we did break above it, it then tries to sell off, and we've got a perfect bounce off that 200-day moving average. So very technical move there, and you can now see that we've really have broken above that now. So the next sort of fib play would be from lows to highs here, but of course we're still miles away from the 50% retracement. So if we do get any further sell-off, the 50% or the 60% could coincide with this trendline support here. So keep an eye on that. But that's all I'd really be focusing on this dollar yen chart, to be honest with you. Okay, that's the Forex done. Let's have a look at the gold chart. It's always good to keep this trendline support on there, just to keep some sort of perspective in mind. Another thing on this weekly, you can see we had a lovely reversal off that 55-week moving average. We said up here, I remember doing these videos, we said we're now well above this. We're now well above any sort of above the trend lines and the moving average, and we were testing this key resistance, which was around the sort of 1680s level, and it was struggling to get above it. And we said look out for a retracement and look out for any sort of buying opportunities off the 55-week moving average. And surprise, surprise, that's what we've got, literally to the pip, that 55-week moving average. And it is starting to bounce up, but it isn't really bouncing up with any sort of conviction. So if we do get a further sell-off this week, then I'll be looking out for that 55-week moving average and the trendline support. In terms of the daily chart, you can see it's starting to get a bit sticky around this 100-day moving average. And yes, it is starting to bounce up a bit at the minute, but I wouldn't be surprised if it just chopped in between 100-day and 55-day moving average, leading up to Santa Claus time, really. So one thing I did remember looking at this week was, if you zoom in a bit on this daily chart, if you just look at the recent sort of swing low to swing high, you can see we had a lovely bounce off of this 50% fib retracement. Look at the sort of candles around here. You had 3 there, spiked below, and then candlestick closes above, and around here we've had it as well. So keep that in mind. Very technical fib play. I want to draw the levels up on there actually, so you can see what price this is at. Yeah, so the 50% comes in at around 17.13, and that's what we've already started to have a bounce off of. So if we do get any further pop towards the upside, which does look likely on gold, then the first sort of hurdle it needs to get above, if we're going to get any sort of nice flows and Momo towards the upside, then we need to get above this 17.32 level, which is the 55-day moving average. But that's all I'll be really focused on this week, is that fib play, because that's what everyone's looking at, and it is working out very nicely. Okay, that's done for the charts. Let's have a quick flick to the Forex calendar. Monday today, what have we got coming out? In terms of main headline data, at 9:30 with the UK manufacturing PMI, that's forecast at 48.1. At 3 o'clock with the US ISM manufacturing PMI data, that's forecasted at 51.5. Tomorrow, quite a lot of Australian data. We'll have a little look at Aussie dollar next week. At 8 AM we have Eurozone and Spanish unemployment change. The previous number was 128.2 thousand. There's no forecasting number this week. At 9:30 tomorrow we have some more UK data. The UK construction PMI numbers forecast at 50.7. And we have some Canadian data at 2 PM. On Wednesday we have some more UK data at 9:30 of the UK services PMI. I'm expecting a better number than previously. Previously it was 50.6, we're expecting 51.1. We have a Spanish 10-year bond auction which is tentative throughout the day. At 1:15 PM with the US ADP non-farm employment change numbers, which are forecast at 127,000 from the previous 158,000. At 3 o'clock we have the US ISM non-manufacturing PMI numbers. Very key there, especially people who trade stocks. They're forecast at 53.8 from the previous 54.2, so a slightly worse number there. But anything above 50 is quite important and is what people sort of hope for. So if it does come out a little bit worse, then I wouldn't be too worried, to be honest with you. On Thursday, we have some more Aussie data overnight. We have some more UK data at 12 o'clock with the asset purchase facility and MPC rate statement and the official bank rate expected all to stay the same there. So you've got 0.5% and 375 billion. At 12:45 we have the Eurozone minimum bid rate, that's expected to stay the same as well. And we have the ECB press conference which follows. But you've got to remember, I mean, leading up to Santa, you've got to think there's going to be no sort of major changes, in my opinion. The only thing that everyone's thinking about is the fiscal cliff, which will happen at the start of the year. So we'll be very surprised if there's any sort of interest rate hikes just before Christmas time. It would be very unexpected. So expect both of them to stay the same, in my opinion. At 1:30 the weekly jobless claims, which is forecast at 381,000, and we have some Canadian data at 3 PM. On Friday, more UK data at 9:30 of the UK manufacturing production numbers, forecast at minus 0.2% from the previous plus 0.1%, so we're expecting some weaker manufacturing data there. At 10 AM we have ECB President Draghi speaking, so keep an eye out for that because it will move the markets. We have some more Canadian data at 1:30 there, so we've got employment change and the employment rate numbers coming out. And at the same time, of course, the headline of the month is the US non-farm employment change numbers. The last numbers for the year, so they'll be looked out. They were looked out for like a hawk, really. Previous was 171,000. We're expecting 91,000. So we're expecting a really shoddy number there at 91k. I'm surprised that's such a low forecast, really. But the unemployment rate is expected to stay the same at 7.9%. And to round off the week, in terms of key economic data, we have the US preliminary University of Michigan consumer sentiment forecast at 82.1 from the previous 82.7. Okay then, that's all for today. Hope you have a great week trading, and I'll catch you next week. Thanks for listening.